Hello, everybody, and thank you for joining the latest Retirement Genius Brainstorm webinar. I'm your host, Chris Orestes, president of Retirement Genius. It's a pleasure to have you join us today. I appreciate you taking some time out for us to talk about life settlement markets update and opportunities. What's going on in the life settlement marketplace? The market numbers are in. I'm going to look forward to sharing some of that with you. Talk about where things stand with the overall marketplace, regulation, and opportunities to be using the life settlement transaction in your practice as another financial tool to help your clients. Retirement Genius is an information and resource platform where we work to help people achieve a well-balanced retirement. We focus on financial information and resources, health and long-term care, security information and resources, and lifestyle information and resources. It's our belief you need to bring these factors together to help people retire like a genius. And I want to start by defining the life settlement transaction. I know life settlements is something everybody's heard of. People are aware of it, but there's often confusion about exactly what it is. There's old biases, outdated information and notions of what the market is today versus what it was 20 years ago. But in simple terms, the definition of a life settlement is it's the sale of an existing life insurance policy by the policy owner to a third party for some form of consideration greater than cash surrender value, if there is any, but less than the full death benefit. So the owner is going to sell off their policy. They're giving up ownership rights. The third party now becomes the new owner, acquiring the ownership rights and taking over the responsibilities of the party of the policy. Typically, the third party buyers at this point are larger financial institution, investment groups, hedge funds. Major financial institutions are focused on buying life insurance policies in large quantities in the secondary market because it gives them an alternative asset class to balance their holdings and portfolios, because life settlements and life insurance policies are an uncorrelated asset to the overall performance of the economy. No matter what's going on in the economy, whether it's up, whether it's down, no matter what the stock market's doing, no matter what the real estate market's doing, no matter what inflation's doing, a life insurance policy's death benefit is a guaranteed payout. It is uncorrelated from the market, unlike stocks and real estate, which will fluctuate in value. After the life settlement transaction is complete, the insured remains the same on the policy, but the original policy owner no longer owns or has any responsibility for making premium payments. That has been taken over now by the new third-party owner of this policy. And a good way to look at life settlements is it's a way to extract hidden asset value from the policy. Remember, insurance policies, life insurance policies are assets, and they are on an equal footing to, say, your home. And that's actually a good comparison. You look at your life insurance, you look at your home, you're paying mortgage payments on a home for years. It's personal property. You don't one day just dump the home without selling it if you're going to move out of the home. You're always going to sell your property and get its market value. Well, the same is true for a life insurance policy. It's personal property. It has value. And after years of making premium payments, a person should not abandon a life insurance policy without first finding out, could they qualify for a life settlement? And if so, what is the market value of that asset? At the end of the day, for most people, their home and their life insurance policy are their two most valuable assets. Everybody gets that about their home, but far too few people really understand that about their life insurance. So a little history of life settlements. Where did we start and how and where are we today? Well, life settlements first emerged as what was known as a viatical. It was a financial option for people who were struggling with and dying from AIDS 20, 30 years ago, and their health insurance benefits weren't covering their treatments. And somebody figured out that because life insurance is an asset, it could be bought and sold, and that was a way to raise money to help people pay for their care. Over years from there, the life settlement market began to grow and mature into where we are today, as investors were seeing this asset class as something that they could work with, that they had not yet brought into their scope of assets that were something that they could value and use in their asset portfolios. Consumer awareness kept growing. Regulatory oversight continued to strengthen and emerge across the country. What started out as a entirely unregulated transaction is now one of the most stringently regulated insurance transactions there are. There's been a large increase in advertising, marketing, and advisors of all stripes, not just insurance advisors, but investment advisors, accountants, attorneys, people who work in the long-term care world. There's been a real growth of understanding and awareness of what life settlements can do as a financial transaction for the policy owner, as this has become a very mainstream transaction. And now we're at a point where billions of dollars every year of death benefits are settled and purchased from the original policy owner over to the new policy owners that are buying these policies by the billions now every year. And let's look at how the market has grown over the last 5 years. It's been quite significant. Go back to 2017 when the numbers really started to be reported, tracked, and you had 2.8 billion of death benefit that was settled across 2,000 policies. By 2020, you had 4.6 billion. The market had almost doubled in death benefit and number of policies that were purchased. 2021, there was a pullback in the market, and that was driven by the COVID outbreak. People became concerned about their mortality and were holding on to policies in 2021 that they might otherwise have sold. But you can see the growth and trajectory of the market on a very steady pace until it hit the COVID road bump in 21. 22 is back on track, and we'll talk a little bit more about that in a minute. A big part of what drives the life settlement transaction as a viable mainstream financial option for seniors is just the incredible difference between what happens to a policy that's settled versus a policy that's lapsed. So if in 2021, there was, call it 3,000 life insurance policies settled, that's compared to 9 million policies the same year that were just lapsed. You had $4 billion of value given to $4 billion of death benefit that was rescued versus $642 billion of death benefit that was abandoned by those policies that were lapsed. And of that $4 billion of rescued death benefit through the life settlement transaction, $750 million was paid out to policy owners across those 3,000 policy owners. That's a lot of revenue paid out to policy owners that otherwise would have abandoned their policy for nothing or next to nothing at all. And when you compare the cash surrender value that was in any of the policies of the 3,000 that were settled, not all of them had cash surrender value, but for those that did, the settlement value compared to the cash surrender value in those policies was 7.8 times higher than what was in cash surrender value. Consistently, we see life settlements beating cash surrender value in a 5x to 10x range. And in 2021, according to the reported numbers, 7.8x over cash surrender value was paid out to policy owners. When you look at the staggering difference in the amount of policies that were lapsed and surrendered over the last 20 years, go back to 2000. Between the decade of 2000 to 2009, 120 million life insurance policies were abandoned, $7.2 trillion worth of death benefit. In the next decade, 2010 to 2020, a little bit lower, but still staggering numbers. And so when you combine those and you look at the last 20 years, 216 million policies have been abandoned for $14.5 trillion worth of death benefit. And the truth is a percentage of that could have been rescued through the life settlement transaction, generating money to the policy owner and generating revenue to the agents that were bringing those settlement opportunities forward. So we've seen steady market growth over the last 5 years. There was a pullback in 2021 due to fears around COVID, uncertainty about mortality and the availability and effectiveness of vaccines. But by 2022, there seemed to be a return to normalcy, enough at least that there's been a very robust recovery in the life settlement market. And the 2022 numbers, when they come out next year, will be very interesting to see. But by all reports, 2022 is looking like it could be the biggest life settlement year yet so far. So now let's shift to take a look at the market itself. Let's do a bit of a market overview. First, when you consider the size of the marketplace, and that is life insurance policy owners, 255 million life insurance policies are in force today. And as I pointed out, a staggering number of these policies are abandoned on an annual basis. And unfortunately, much of what's abandoned could have market value and put a financial opportunity into the hands of the policy owners that many are missing out on. Seniors in particular, because they are the group most likely to qualify for and be able to do a life settlement, you're looking at on an annual basis, $200+ billion on an annual basis of life insurance policy death benefit owned by seniors that could possibly qualify for a life settlement. Unfortunately, statistically, as much as 9 out of 10 policies owned by this cohort are in danger of being lapsed or surrendered without taking advantage of accessing the market value they could get through a life settlement. But consumer awareness is growing, and quite frankly, right now it's at an all-time high. People are seeing TV commercials, they're reading articles, they're hearing radio ads. There's more awareness, more attention being brought to life settlements today than ever before. And what I say to advisors is, if you're not talking about life settlements to your clients, there's a good chance somebody else is. Either they're calling a 1-800 number, they've seen on an ad, maybe their attorney's bringing it up, maybe their financial advisor's bringing it up, maybe somebody they talk to in a home care company or an assisted living community has brought up the idea of a life settlement to them. But for licensed insurance agents and advisors, you are the people that should be talking to them about this. You are in the best position to advise and guide your clients towards accessing this as consumer awareness continues to grow. What is the way that you can access this market? Well, let's look at how things have evolved. Up until the last, say, 5 or 6 years, the life settlement industry was primarily driven by life settlement brokers who would take a case, take it out to shop, look for bids, and then take a brokerage commission out of the offer before it would go to their client. What has emerged in the last 5-6 years is a fee-based settlement model has really started growing, where where instead of brokering a settlement, agents are referring cases into buyers for a no-load settlement with no commission being taken out of the offer. So in a brokered settlement, the broker holds a brokerage license, and anybody else who's involved in the transaction, if you're an agent, you're an advisor, if you're taking a portion of the brokered commission, you too need to hold a settlement broker's license. But if you're doing a fee-based settlement, you don't need to hold a settlement broker's license because there's nothing being taken out of the offer. There's no brokerage commission. It is a fee that's being paid, and we'll talk a little bit more about that in a few minutes. Also, in addition to the licensing requirement to broker a settlement, you also would need to secure the appropriate E&O coverage, which your standard E&O coverage for agents and advisors does not cover life settlements. In a fee-based arrangement, there's not only no licensing requirements, but E&O is provided as part of the referral appointment agreement. There's disclosure and reporting requirements for brokered settlements. All commissions and participants in commissions are fully disclosed. But in a fee-based settlement, there's no disclosure or reporting required because nothing's being taken out of the offer. It's being paid as a referral fee separate from the offer, so there's no disclosure or reporting requirements around that. And in a brokered settlement, the responsibility for building the case, retrieving records, securing multiple offers, showing all these offers, it's a long process that takes a lot of work. Whereas in a fee-based settlement, the referring agents are not responsible for any records. There's no case management, and they're only responsible for one offer that's being generated by the funder, the buyer themselves, without any commissions being taken out of the offer. A brokered settlement, commission levels can be as high as a third of the offer being taken off the top before it goes to the consumer. In a fee-based settlement, it is a percentage of the death benefit, and nothing's being taken out of the offer. So typically you're going to see a full gross offer going versus a net offer in a brokered settlement where all the commission has been stripped out of the offer before it goes to the client. So let's talk about market opportunities, how you enter the market. Let's start with who qualifies for a life settlement. Well, remember this, life settlements are really designed to economically reward the policy owner, the older and the sicker that they are. Life settlements are a unique financial transaction because they will pay out a higher value to the policy owner, the older and sicker that they are. So if you're too young and too healthy, you're not even going to qualify for a life settlement. Typically, the person who's going to qualify for a life settlement is 65 and above, has impaired health, chronic conditions, sometimes maybe even terminal conditions. The average age that we see for life settlements is 72 and above with a remaining life expectancy of 10 years or less. Any kind of life insurance policy is going to qualify. Universal life policies, term life policies, preferably convertible, whole life policies, group-owned policies, anything, variable life policies, anything you can think of will qualify for a life settlement. The minimum death benefit value for any given policy to be settled is $100,000. It is an age and health condition-based transaction. Certainly there are exceptions, and we have seen settlements for people that are younger. I unfortunately have helped to do settlements for people in their 40s and 50s, but they were suffering from very grave situations such as ALS, cancer, rare conditions that their remaining life expectancy was going to be short enough that it was viable for them to tap into the value of their policy through a life settlement. And life settlements provide a range of funding options starting with it being an income generator. For many people, they're going to do a life settlement for a lump sum settlement. They're going to get a payout in one lump sum for the sale of their life insurance policy. But for many, there are a variety of other uses for a life settlement to achieve their financial goals. One is doing an LTC life settlement, a life settlement that's specifically structured and priced for people to pay for long-term care services in a very tax-advantaged way. There's also setting up an income annuity for people who are looking to guarantee an income stream, taking the funds from a life settlement, putting some or all of it into an annuity to make sure they have income guaranteed for the rest of their life. And then for people who are no longer going to keep a life insurance policy, there's also, but want the protection of a death benefit, there's the option of a retained death benefit settlement where you are giving up the policy, but staying on a portion of the policy to collect a reduced death benefit in the future for whoever your beneficiaries are, but no longer having any premium payments responsible. So let's take a minute to look at these in a little bit more detail. One option to generate life settlement business as an agent, as a producer, is by analyzing a book of business. And we see a lot of life settlements coming from rescuing policies that are in books of business that the agents are getting monthly alerts about potential time for a term conversion or a lapse pending, or the possibility that the owner wants to surrender or roll over their policy into another vehicle. These are all green lights to look at and talk to the policy owner about, would a life settlement make sense if one of these situations arise, and analyzing that book of business in advance to identify as many policyholders as possible that could potentially qualify for a settlement, to let them know that before they would go forward with any of these options with their policy, they should be contacting you as their agent first to explore the market value of their policy through a life settlement. There's rescuing orphan policies. We see this all the time, policies that are just floating around out there, and agents who are out there marketing and working with prospective clients, current clients, finding orphan policies that might be abandoned and giving that policy owner an option to do something else with the policy instead of letting it go. Underperforming ULs, we're seeing a lot of activity, a lot of interest from people who own ULs that were bought with unrealistic performance projections that are underperforming, getting ready to blow up. They want to get out of the policies, and those could be, this is a life settlement exit opportunity for that policyholder. Then long-term care, using a life settlement to pay for long-term care. If a person's in need of funds for long-term care services or expensive healthcare services of any sort, owns a life insurance policy, the life settlement becomes a very viable option to get a pretty high percentage of the death benefit back under very tax advantaged terms, to then use that money. And we have seen countless times people's situations rescued through a life settlement where they were able to move into an assisted living community, able to secure home care, and not have to just go on to Medicaid and move into a nursing home, or not have to rely on family to be paying for everything. By using that life insurance policy and putting those funds to work towards their long-term care needs. Again, somebody who wants to maintain a death benefit but really can't afford the premium payments anymore, doing a life settlement for a retained death benefit becomes a viable option to still hang on to some death benefit protection without any more premium payments. And for those looking to fund an annuity through a rollover, comparing the life settlement value to cash surrender value in a rollover makes a lot of sense when you consider that, as I pointed out earlier, In 2021, you had a 7.8 times greater return from a life settlement value than cash surrender value to put towards an annuity. So if somebody's looking at rolling over cash surrender value into an annuity, they really need to see first, do they qualify for a life settlement, and how much more could they get out of a life settlement than the cash surrender value itself. And then for people who bought policies for estate planning purposes, the policies now may no longer make sense based on changes to the tax rules and where we are with estate tax limits, uh, people's circumstances changing in their overall estate planning strategies. That is definitely a place to be looking at life insurance policies instead. Again, lapsing or surrendering, abandoning those policies. Here becomes an exit strategy for an unneeded policy that was purchased for estate planning reasons. And across all these, let me just give you sort of a quick case study example. This is a hypothetical case study example based on the kind of typical numbers that we see happening in life settlements today. An 80-year-old female with impaired health. She's got a remaining life expectancy of under 10 years, owns a universal life policy with $1 million death benefit, has been making $30,000 a year premium payments for the last 10 years, and has $20,000 of cash surrender value. Now, for many people in this situation, they will look at that and think to themselves, do we really need this policy anymore? Do we really want to make another $30,000 of premium payments? Or do we take the $20,000 of cash surrender value? That's $20,000 tax-free money. Take the money and run. A lot of people would look at that and think that's a good option. But before they did, the important thing is looking at the market value. When you consider that the average payout for a life settlement in today's market is maybe 20, maybe even 25% range, you're looking at $250,000 of settlement value versus $20,000 of cash surrender value. And because they've made $30,000 a year of premium payments, there's $300,000 of basis into this policy. Anything you get in a life settlement at or below basis is tax-free. That's $250,000 of tax-free money versus $20,000 of tax-free money for just taking the extra step to get a policy appraisal. Would this person qualify? Get an offer, and then evaluate the offer against keeping the policy in force, taking cash surrender value. And in this circumstance, certainly it would make a lot of sense to take $250,000 of tax-free money out of this policy and move on. Let's look at where market regulation sits right now for the life settlement market, starting at the very basic legal underpinning of this transaction. Life insurance policies are legally recognized as assets. They are personal property owned by the policy owner. As I pointed out earlier, it's really no different than, and from a legal standpoint, on the exact same footing as a home, a life insurance policy and a home. That owner of the life insurance policy owns that asset, controls that asset. It has market value. And if they decide they don't want to keep it anymore, they have the legal right to sell that policy into the secondary market, where there is a very robust, well-regulated mainstream market sitting in place today. Today's life settlement market and its regulatory structure is very different than when it was 20 something years ago. And I remember back in what can be called the Wild West days, when this was an unregulated transaction. That is no longer the case. 45 out of 50 states regulate life settlements and viaticals, covering 90% of this country's population. And for those 5 states that don't regulate life settlements, any life settlement transactions that are conducted there are typically conducted under the same regulatory framework as the regulated states, because everybody's systems are in place, everybody's paperwork's in place. So you've got a very uniform, well-structured mainstream transaction to be able to work with. This is very much become one of the best regulated financial and insurance-based transactions that there is today. In terms of tax treatment, there's two things to point out about tax treatment for life settlements. One, if somebody is diagnosed as chronic or terminal, chronic being 2 ADLs or more, terminal being 2 years of life expectancy or less, then the proceeds from a life settlement are going to be tax-free. If they don't have that HIPAA exemption for their life settlement, then you're looking at basis in the policy. As I said, anything at or below basis in a life settlement is going to be tax-free. And then anything between basis and cash surrender value that was in the policy would be taxed as income. And then anything above cash surrender value is taxed as capital gain. So this is a very tax advantage transaction. The vast majority of people who do life settlements end up not needing to pay taxes, or if they do, it's very little. There's also a suitability and fiduciary element to this, and it's important that agents and advisors know this. And you know, I warn everybody that I talk to when I talk about the life settlement subject. You've got to understand there are cases in case law on the books. There's precedents from policy owners who have sued their agents and the carriers for keeping information about life settlements away from them. Policy owners have come back to their agents and have said, we surrendered a policy, we lapsed a policy that you wrote for us, you never told us about the life settlement option, you hid that from us, and we lost out on the opportunity for tens to hundreds of thousands to maybe even millions of dollars. And there have been lawsuits filed to recover that money. And that has become a precedent out there that agents need to be aware of and look at life settlements as both a defensive and an offensive strategy. On the defensive side, making sure you're covering the base that you've let people know this is an option. This is, here are outlets for how you could access this option. And then as an offensive strategy, positioning yourself to be an agent that can refer that business or broker that business and receive monetary rewards for having fulfilled your obligation, your fiduciary obligation, when it comes to making sure that your clients are fully aware of their financial options and the fact that their life insurance policy is an asset that they own that has market value. There have been a number of endorsements, a lot of positive media coverage over the years. If you look, you'll see the Wall Street Journal, the New York Times, AARP, all kinds of publications talking about the advantages for seniors to do a life settlement. Regulatory, legislative bodies have endorsed life settlements. The National Council of Insurance Legislators, NCOIL, NAIC, the National Association of Insurance Commissioners. And there's even legislation that's been pending in Congress for the last couple of years to create a senior health planning account that would use the long-term care life settlement and the advantages of long-term care life settlements to help people, in essence, create a health savings account that they fund through a life settlement where all the money would be tax-free, regardless of their basis, regardless of their diagnosis. As long as that money stayed in the account to be used and was used for health and long-term care expenses, then the entire proceeds from a life settlement would be tax-free. So let's talk about how you can be in this market. What we offer, Retirement Genius, is a turnkey strategy to get you into this market. Use this as a mainstream financial tool in your practice, because this is a way for you to deliver new value to the policy owners from an overlooked asset that they may be throwing away. This is a way to deliver more funding solutions to help them meet their retirement and long-term care needs. This is putting you in a position to turn old business into new leads for new sales and even develop new relationships. I can't tell you how many times agents have told me about a life settlement they've done for somebody that then opened up the door to the family members to write annuities, to write long-term care policies, to sell life insurance because they saw their agent working with their loved one come up with a creative solution to meet their needs. Trust was built, respect was built, and new opportunities were built. This becomes a recurring revenue stream for agents that use this as a part of their practice. And there's a couple of ways you can be using this as a part of your practice. One, at the retail level, offering it on a regular basis. You're out there talking about insurance products. This is just another insurance product. But instead of trying to sell somebody life insurance or long-term care insurance or an annuity, you're helping them sell off the asset. There's no cost, no obligations for them whatsoever. I mean, what could be an easier sell than selling something for free? You're not collecting premiums. You're not selling anything. You're just making sure they have access to a way to liquidate the policy instead of abandoning it. So putting it in your emails, putting it in your presentations, talking to your referral sources, getting it on your website, getting it out there in your social media, making it a regular part of your practice. And I've had people say to me, well, I'd like to work with this. I just don't have many people calling me, asking me for a life settlement. And, my response to that is, well, how many people called you today asking you to sell them a life insurance policy or sell them an annuity or sell them long-term care insurance? If you're not out there talking and you're not out there educating and you're not out there selling, you're not going to find opportunities. But if you do, if you start talking about this, if you start working with this, you'll be amazed that all of a sudden the opportunities start popping up and there they are. Then the wholesale strategy. And I talked about that a little bit earlier with working with a book of business. Let's make sure that instead of letting policies just fall off a book of business every month, that we notify the policyholders that they have other options, that they can work with you to get the most out of that policy. If they're gonna abandon a policy, if it's a term policy that's coming up for conversion, these are opportunities to let people know there are ways to use that policy to their advantage. And then working with Retirement Genius, we support you with our Life Settlements Direct program. We focus on referral-based, fee-based settlements. Now, we can certainly help anybody who wants to broker a settlement. Those outlets are available to us, but we like to focus on where the market's really going and growing, and that's a lead referral system. This gives agents working with the Retirement Genius Life Settlement Direct system outlet to just refer the business over. You don't have to get bogged down in needing life settlement brokerage licenses and special E&O and building cases and retrieving medical records and working with all sorts of brokers and then taking commissions out of the offer, and all that is reported back to the policyholder and disclosed to your carriers and your IMOs. There's a lot there. But in a lead referral system, it's just a simple referral over, and then Retirement Genius's system does the work for you. No additional licensing. E&O coverage is provided for you. We set you up with marketing materials and then full back office support, so you don't really need to lift a finger other than the education, the marketing, the outreach to clients, referral sources. And from here, you're receiving referral fees in a no-load settlement and being able to create this recurring revenue stream in your practice. Retirement Genius provides what we like to call a life settlement in a box. It's a turnkey marketing and back office system, so you can add life settlements to your practice as another insurance product. We will be providing you with all sorts of marketing materials, flyers, stuff you can use either through email or print or online, social media. We're going to provide videos, educational videos. We have a whole suite of generic, private labeled videos and marketing materials that you will have access to, so that people are seeing your educational efforts, reaching out to you, and then you're able to refer the cases in to Retirement Genius to do all the work for you. So what do you need to remember about life settlements in this opportunity? Well, remember, life settlements, again, are uniquely designed for seniors. The older and sicker you are, the more and better you're going to be able to do with a life settlement. It's a tool for health and long-term care funding. It's a legal right of every policy owner to do a life settlement. There's no costs whatsoever for somebody to do a life settlement. There are no out-of-pocket fees for the policy owner to do a life settlement, and there's no obligations. They can go right up to an offer and decline it. They can even accept an offer, change their mind. There's a rescission period even after the settlement has closed and been completed. There's still time for somebody to decide if they don't want to do the life settlement. No costs, no obligations, tax advantages as I laid out, and the process is actually pretty quick and easy. A settlement from the initial intake and review, oftentimes, if somebody's not going to qualify, we can catch that right at the initial intake. And from there, decide what kind of underwriting, what's needed. We move forward with a simple intake form and authorizations to collect medical records, do the underwriting, do the pricing, present the offer, take them through the settlement closing process, and then pay out on the settlement. The whole thing from start to finish is about 60 to 90 days. So life settlement opportunities are there for you to be able to tap into. Retirement Genius is there to work with you with our Life Settlement Directs program, so you can help people create income from an existing asset. This puts you in a position to generate more funds for your clients to enroll in annuities. So there's fees to be made from a life settlement, but there's also fees to be made from the additional transactional opportunities that will emerge. This is a way to use a life insurance policy to help people fund long-term care. It's a way for people to be able to continue death benefit protection through a retained death benefit that they don't want to abandon. And this is a tool to help you prevent all of these policies that are lapsing or being surrendered and just falling off of a book of business every month. And again, you're not selling anything. You're just providing a service to help people access the market to pay out the market value for an asset they already own. They've made premium payments in for years, and they're in danger of lapsing or surrendering. So thank you so much for joining today's market overview and market opportunities in the life settlement market, a growing market. Excited to see now that we've sort of got the COVID uncertainty in the rearview mirror. The 2022 numbers are going to be real interesting. And 2023, the market's going to be thriving. There's going to be more advertising than ever, more consumer awareness, and more professional advisor awareness than ever. Like I said, if you're not talking about life settlements to your clients, somebody probably is or will. So I encourage you to reach out to us. We'd love to send you a copy of our Retirement Genius white paper tip sheet, life settlement market update and opportunities. Give us a call, 866-602-5000. We'll make sure we also follow back up with you to get you a recording of today's webinar. And we look forward to making sure we're talking to you about how you can use this program, get you appointed and set up in the system to start working with this program today. Go to advisors.retirementgenius.com for more information. You can also sign in there to set up getting yourself appointed. There's also our consumer website. Encourage you to take a look at retirementgenius.com and visit our podcast. We've been a Forbes podcaster all year. We've got some great episodes wherever you get your podcast. Just look up Retirement Genius and check out the Retirement Genius podcast. We look forward to working with you, talking to you, hearing back from you soon.